economy had created more jobs than expected last month. That pushed the dollar up to a 5-year high, and because it's measured relative to the dollar, the rand lost ground. Then this morning there was an opposite effect from China. Chinese economic data disappointed. That's bad news for South African miners and other businesses that export to China. That put all emerging market currencies in trouble, including the rand. Now it comes before Fitch and Standard & Poor's review South Africa's credit rating on Friday, and the deficit is something that they do look at. Fitch may downgrade South Africa, but if Standard & Poor's reviews our outlook to negative, that could be even more dire news. It means we're on watch for a downgrade, which according to that rating agency could send us to non-investment grade or junk status in future. Well, to discuss further, we're joined by Mike Schussler, Chief Economist at economist.co.za. Thank you for joining us, Mike.
Pleasure,
So for lay people, I think all these forces that buffet the rand can be confusing. Let's start with the deficit. So we're importing more than we're exporting. There's this gap. Just explain how we have to pay for that additional imports, how it affects the rand.
Well, essentially our checkbook with the rest of the world is negative. In other words, we buy more than we sell. And under those circumstances, that means we have to find the money somewhere, either in our savings or other people put their money into our country to save their money here, that we can buy the stuff that we want. And that is the problem, that we are 6% of our total value, we're in the red with our checkbook, but we're growing at less than 2% our total value. So people are starting to wonder, will we ever be able to pay this back in a decent manner? And I think what's happening is that the tide on our investment side is starting to turn against us, because as you heard now, the rating agencies in the news are very likely to downgrade us. Fitch might downgrade us by Friday. The others might just keep us on a ratings watch negative, or they'll take a while to make their decision. But the fact is, we're just one step away from the biggest rating agency in the world to going to non-investment grade rating, and that's not a good sign.
And explain why we call it junk status, why we should be so fearful.
Because we've got a low growth rate and we spend more than we sell. It means that the risk of a default on South Africa becomes more. So the non-investment ratings have a much higher rate of default in the history of this. It doesn't mean we're going to default. South Africa has never defaulted. But it does say that that chance of a default is increasing. And that's the way that these rating agencies see it. And the rating agencies, because of the mess of 2008 and 2007, have become a lot more conservative. Because then we shouted to them as people of the world, why didn't you warn us? And now when they're busy warning us, now we don't like it when we're on the receiving end. So it's a very complicated situation perhaps, but easily put, we as a country are living beyond our means. Our government spends more than it gets in taxes. Our people spend more, and we've got a negative saving rate on our personal account. So ultimately, yes, we are paying off our debt, but we're living on our savings, and we're eating into those savings, and that is a problem.
And right now with the Eskom load shedding and the rand falling, I think people feel like, are we heading towards an economic meltdown? Just put it into perspective.
I don't think it's a meltdown, but it's very much a situation where things are not going to improve very quickly. We're probably going to get growth again, but like this year, we're going to have a 1-2% growth rate, which is nowhere near enough for us to create the jobs that we need. And part of that thing is that Eskom cannot provide the power. If we wanted to put up a new refinery, right now, there's no power for a new refinery or a chrome smelter or aluminium smelter. So many projects there's just not electricity for. And if that's the case, then that means we cannot create jobs. Because remember, it's not just those jobs on the factory floor that we should be looking at, but when the factory workers go and shop and things like that, and what they can sell to the rest of the world. So it means that we're more likely under these circumstances to be importing more or buying more from the rest of the world than selling. And that's why people are looking at our current account and saying, well, look, it's 6% of GDP, one of the deepest current account deficits in the world. It's unlikely to get better very quickly, and we're not going to grow very fast. So ultimately, those are the fundamental factors, and we need that growth. We have, in broad terms, 8.5 million people without a job that would want a job. They're not all unemployed because official definitions add other things to it. The fact is there's 8.5 million people who do not have a job who would like to start a job in a short time.
To put it simply, we want to get things in gear again. Companies building up, and then they start exporting and they create jobs. So they solve the internal and the external problem. Barring Eskom, why is that not happening? Why do we talk about this structural problem in South Africa?
Well, the fact is that a lot of our costs are very expensive, whether it's our productivity, our labor costs, our transport, logistics costs. We're far away from many markets around the world. We're doing very well in Africa at the other hand, but ultimately our products haven't done well, plus the commodity prices are coming down. Now that's good on the oil side, and we say, yay, less petrol that we have to spend, money we have to spend on petrol. But remember, our gold and our platinum, our coal, our iron ore, and our copper just isn't earning what they earned before. So that's the one area that we need to address. Plus, as you said, the electricity and other constraints are stopping us getting those other manufacturing products out there, even at a much weaker rand, which should help a little bit, at least for the short term, but hasn't in the last 3 or 4 years. We've not seen our exports rise.
Well, let's talk about that, because the Reserve Bank always says, so we have a currency that can absorb shocks because it can go up and down. Technically, what should happen is that the rand weakens, then our exporters can sell their goods on the market much more easily because it's cheaper. But like you, a lot of analysts are saying that effect is not happening, that self-correction. Why?
Well, the self-correction of the rand is starting to happen. That hasn't happened sooner because we've had assets to sell. With other words, people invest in our stock market because they see it as cheap in American dollar terms or euro terms, and they see us broadening from here. So our guys have taken our money and put it into other countries where those assets are growing, whilst it's not growing in South Africa as much as it should do. And I think ultimately the one thing that we've got to remember is that the South African rand is our shock absorber of the first thing. But what it does do, it's going to make imports very expensive. Now, petrol's not the only import. We have medicines, we have cell phones. Not one cell phone is actually made here. We do make a few, but I mean, not anything close to enough. And TVs and so on. Even if we make them here, the components come in. The car's components come in. And then on top of that, the maize price is related to the dollar. And that maize price then feeds through in chicken prices and in milk prices and so on. So ultimately, the shock absorber is the rand. The problem is the rand weakening does take away a lot of the income that consumers earn, and it makes it much more expensive for us to live. We've all been to the shops recently and had the shock of our lives when we go and see some of the products on the shelves.
What does this mean for Christmas for next year? Do you see a time when it starts to get better? I think
this Christmas is not going to be too bad for consumers because we've had that 2 rand petrol cut from its high point in May. I think people will have a bit more money to spare. In April, we should see another petrol price hike, but that's only in a decrease, sorry. We should see that in the short term. But once those things fall away, the other things are going to take over. And in the medium term, I think it's going to become a lot more difficult to really make ends meet for many, many consumers out there. And there's a possibility of further tax hikes. And then there's the possibility that you won't have power, so you need to now make a plan with not having the power around. And we all know electricity gets 13% more expensive come April for Eskom customers and municipalities from June.
So prepare for more pain, unfortunately. Thank you for your analysis. That was Mike Schussler. Well, we were talking about this. Eskom today has issued a public apology for the